Welcome back to the Crypto Coffee channel, everybody. In this video, we're going to slow things down a little bit for somebody that might be new to Hex.com or that might have heard something online about Hex being a Ponzi scheme. Now, if you're brand new to Hex and somebody told you Hex is a Ponzi scheme, or if you're Googling on the internet and you found a poorly researched article, you're going to need to watch this video or send it to that person who might be unfortunately so misguided to help them kickstart their journey and get around all the misinformation that is still out there and still lingering. So we're going to talk about what is a Ponzi scheme first, because in order to call something a Ponzi scheme, you have to understand what the word means that you're saying. So a lot of people like to throw around the word Ponzi scheme just to easily dismiss something that they don't fully understand. And really, I'll just do a quick Google search for you guys. We're going to walk through the Wikipedia article of Ponzi schemes so that you can sound smarter when you talk about and claim that something's a Ponzi scheme. We're going to make this video really short, quick, and to the point. Now, this guy behind me is Charles Ponzi. He is what Ponzi scheme was named after. Let's hop over to Wikipedia really quick and define what we're talking about so we can decide for ourselves whether or not Hex actually is a Ponzi scheme or not. So a Ponzi scheme is a form of fraud that lures investors and pays profits to earlier investors using funds from more recent investors. Okay? This is the quote right here. Just remember that, guys. It's a scheme that relies on new people coming in that are paid from the money invested by old people or the original investors. And it stops working when no new people can be convinced to come on board, because then no new money can come in and the old investors can't be paid. And the key crux of a Ponzi scheme is that they're not really creating any productive investment at all. And money is essentially just cycling around in between people like a game of musical chairs until nobody's able to continue to hop in and the money dries up and everybody loses. Now, there's a lot of Ponzi schemes out there, and a lot of cryptocurrencies have in fact been proven to be Ponzi schemes in the past. I know BitConnect is a famous example of one of those such Ponzi schemes that was exposed and it's no longer existing. Is Hex a Ponzi scheme using that definition? Well, obviously the answer is no, but why? Let's try to understand the asset that we're either about to invest in or that we're already investing in. And so if you're on the fence about Hex and you might have heard something, let's really discuss why Hex is not a Ponzi scheme. So Hex pays out an interest rate of about 40% for average length stakes, and an average length stake in the Hex system is about 5.8 years at the time of this video. So if you stake for less long than that, you'll get a little bit lower interest rate. If you stake longer than 5.8 years, you'll get a little bit higher interest rate. And the question everybody always asks is, well, where does that money come from? How can a coin just pay you that interest? It seems, abnormally high or too good to be true or something like that. Really, it's very simple, guys. Inflation is hard-coded into the immutable smart contract. That's a key word. Immutable smart contract at a constant rate of 3.69% a year. And I want to make this abundantly clear, guys. The interest that you're getting in Hex is just paid in more Hex tokens. So when we talk about the interest rate, you're just getting more Hex for locking it up longer because you're speculating that the USD price will be higher in the future. So there's no US dollars being paid out. Okay. When you stake, the inflation, the rewards you get, the interest rate is just more of the same coin. Okay. Seems obvious, I know, but some people still get that mixed up. So just wanted to clarify. So you're not trusting a human being to divvy out your gains or your interest rate over time. You're simply trusting a mathematical programmed piece of code called a smart contract. Okay. All a smart contract is a piece of code, and it's immutable, meaning there's no admin keys, no backdoors, and nobody can change the code once it exists on the blockchain like it has been existing for the past 666 days. So inflation is hard coded, meaning that constant rate of 3.69% a year is the inflation rate. So the total supply of the Hex coins, all the Hex coins in existence, inflates at a rate of 3.69%, and that inflation is divvied up proportionally to the stakers in the system. Stakers are just the people that have chosen voluntarily to lock their Hex up for a later date. And by staking, you get an interest rate proportional to how long you've staked, how much you've staked, and some other nuances as well. Now, the price of Hex is really just determined by new investors buying coins on the open peer-to-peer market. We primarily use Uniswap and Hex, which truly is a peer-to-peer market. There's no middleman. It's primarily traded on automated market makers such as this. But the price is determined just like any other cryptocurrency or stock. So I buy Hex from somebody that's willing to sell it to me, and thus the price goes up because I'm buying at the price that he is setting. Or on the other side, if I sell a coin, very simply, the price goes down because I want to get rid of my coin and I want to get rid of it to a buyer that's buying the coin at a lower price than the previous buyer bought the coin for. Prices in anything go up and down simply based on what people are willing to pay for them. Buying makes prices go up, selling makes prices go down. It's really, really very simple. And if you want to call Hex a Ponzi scheme because it requires new people to make the price go up, well, then you have to call everything a Ponzi scheme. Bitcoin, stocks, whatever. So if you're going to use such a loose definition and to the point where everything is a Ponzi scheme to you, maybe investing is just not for you. Every investment involves risk, and you should know that you're taking risk when making a speculative investment because you're speculating on the price going up in the future. It's very, very simple. So again, price is set by trading activity. It's not set by any man behind the curtain using your money to secretly pay out the new investors and stealing from you and relying on constant new people coming in to take their money and then pay the next batch of people. There's none of that going on. It's really a simple piece of code. And I'm going to show you what the code looks like yourself because you can go yourself to check it out. So again, no entity is paying the inflation. The constant annual inflation rate of, remember, 3.69% is divvied up proportionally to each staker in the system. Now, where does the inflation rate come from, guys? Anybody can go to this website. It's called etherscan.io. It's really very simple. You just search for Hex in the top bar. Hex will come up first, and you click on the contract piece of Hex, okay? And you can go down here and read the code that is the Hex coin. So if you want to get theoretical, there really aren't any Hex tokens in existence. The code just says and proves with math that the coins exist in the system. There's no physical coins, okay? All cryptocurrencies, even money nowadays, if we want to get technical, is really just ledgers in a database. And Hex is just numbers stored in a distributed database that's stored on many people's machines. So we can scroll down here and see where the 3.69% comes from. And we could see that they do some math here to calculate based on a 3.69% yearly annual inflation rate, what would the daily interest rate be so that we can calculate the daily payouts and the allocated supply per user. So that's where these numbers come from. If you want to do the math yourself, if you're a little technical, feel free to look at this. It's public code, guys. It's public code on an immutable smart contract that nobody can change. It's already in motion, and it really is unstoppable code. Now, if we want to go one step farther, and you hear people talking about doing your own research, okay, I'm going to do the research for you. Right now, I'm showing you hex.com/scam, okay? And you can see one of the first rebuttals to the question, is Hex a Ponzi, is Hex.com is doing exactly what I'm doing. They're defining the word Ponzi for you, okay? It promises high returns that sustain only for a while by stealing the principal investment from new depositors to pay returns to older depositors, right? It fails when it can't meet its obligations. It fails when it can't get any new people to pay the old people, right? Now in Hex, interest, like I said, comes only from inflation, which is paid to stakers. Again, it's programmed into the immutable smart contract with no middlemen. Okay, you don't have to trust a human being. As long as you trust that math is math and that 2 + 2 is going to continue to equal 2 + 2 tomorrow, you can trust that the contract will pay you out, okay, if you choose to stake Hex. Again, it's all voluntary. Now, in Hex, you mint your own rewards by interacting with the contract, and that's what I mean. If you press the stake button, you're entitled to some of this mathematical supply of the daily inflation rate that adds up to an annual 3.69% per year. So then there's also this side argument or this secondary argument of, well, is inflation bad? Shouldn't things not have inflation? That's a really oversimplified argument. People talk about inflation as if it's some evil thing. Okay, it's not inflation that's the evil thing. It's centralized control of the inflation rate that's the evil thing, such as the Federal Reserve being able to print money at any time they want and having astronomically high inflation rates. So is inflation bad or good? Well, the answer is no. It's neither bad nor good. Control of the inflation rate is what can lead to bad things down the road. Now, Hex has inflation. Bitcoin also has inflation. Their inflation rates are a little bit different, but they're both inflationary currencies. Okay. Bitcoin's inflationary. It was 4.25% per year, inflating before the last halving, 1.83% after the last halving. Now, we're not going to get into the technicalities of that, but Bitcoin's inflation structure is just a little different than Hex, which is a little bit simpler at a constant 3.69%. Now, in Bitcoin, the inflation gets paid to the miners of the cryptocurrency. And when these miners get the new coins, they have to sell some of that Bitcoin that they mined into existence and thus inflated the supply. They have to sell some of those coins on the open market to pay for electricity and equipment. This in turn drives the price down. Because again, guys, it's really simple. When you have to sell something, when you have to sell an asset to get money to pay for things in real life, you drive the price of it down, right? If I sell a stock, the price goes down. If I sell Bitcoin, the price goes down. And as a Bitcoin miner, I have to pay for electricity and equipment. Now in Hex, this is a much more elegant solution to the store of value problem. And Hex inflation goes to stakers who vow not to sell, right? There's penalties for selling early if you're in a staked position. Because when you make a stake, you make a contract with yourself, right? You make a pact that you're not going to touch those coins because you want that inflation rate, which is again set by the smart contract. And by not selling, you thus hold the price up because you take coins off of the theoretically circulating supply. So there's less coins to sell. Does that make sense? So if anybody out there is still using the old beating a dead horse argument of Hex is a Ponzi scheme, and if you haven't figured it out on your own, hopefully this video helped you. And if you know somebody that's been infected with this terrible logical fallacy that Hex is somehow or other a Ponzi scheme, share this video with them, share it with everybody that you know, because the word needs to get out there. I mean, this is a topic that I've brought up time and time again, but it does need a refresher because there's a new wave of Hexicans every day coming into the system, and it's really awesome to see. But with this new wave of people means a lot of people are uneducated. So if you're an OG and this is obvious to you, share the video with someone else. And if you're new here, hopefully this helps you get a little bit more peace of mind as to what a Ponzi scheme is and why some random guy on Reddit might not have any idea what he's talking about. Thanks, and I'll see you on the next video.